Wildcat strikes threaten supplies of gold, but upbeat US jobs numbers have taken the steam out of the safe haven bid. The precious metal is down for a second day, but the market looks finely balanced. This is Market Pulse. I'm Axel Threlfall. Joining me now to talk about this, Commerzbank's Eugen Weinberg. Eugen, how long is gold going to stay under pressure like this?
As long as no new speculation about more and more liquidity coming from the central banks will be coming. The gold is likely to stay a little bit under pressure, but definitely for the moment it's still very much supported by this whole liquidity being provided by the world central banks and the upcoming inflation fear. So I think it's probably a short-term consolidation, and the prices are likely to again to continue their path of the last weeks and last months in the near future.
And I imagine that the strikes, the wildcat strikes, and the prospect of more strikes, and the squeeze this is going to put on supply will also help.
It's interesting that you mention it. I'm not looking too much into the mining situation in South Africa when I'm trying to weigh the prospects for gold, because gold is not a usual commodity which is dependent on mining supply or jewelry demand or industrial demand. It's more like a currency. It depends on investors, it depends on central banks, it depends on GDP numbers, unemployment and inflation, but doesn't depend too much on the mining production or the jewelry supply. So it's definitely likely to support the prices of platinum, palladium and rhodium, the strikes in South Africa. But for gold, it's probably non-event.
We're at what, 1768, 1769 now. Once this period of consolidation ends, what's your target?
Yeah, you know, it's just a number. I can say that this year we expected, since probably almost 12 months, that the price would increase to $1,900 by the year end of this year and increase above $2,000 next year. But it's just a number. It's not so easy to calculate based on the production costs or on jewelry demand. It will be dependent on the external factors, and especially of how much liquidity, more liquidity, the central banks will be able and will be willing to pour into the system. I believe that the prices are likely to surprise us to the upside.
And as soon as there's a sniff that the central banks are pulling back, are less willing, how much of a hit could gold take?
Oh, definitely. So, you know, if you're looking at gold only as a commodity, it will be very overpriced, even at the price of $1,500. But as long as this period of insecurity continues, the risk continue, and also this ample supplies of liquidity will continue, which I think will go for not for weeks, not for months, but for years to come, the gold prices are likely to stay very well supported. But as you mentioned, as soon as the real interest rates become positive, as soon as the central banks only show that they're able and willing to exit the current liquidity trap, then we are likely to see the gold price rising, but from the different price levels than now.
All right. Of course, the other part of the story, and we talked about this, was the wildcat strikes. Stay with us, Eugen. I just want to run a quick soundbite. The rand, of course, hit a 3.5-year low, almost 4-year low Friday. It continues to remain under pressure as a result of these wildcat strikes and the measures that are being taken to combat them in South Africa. I spoke to Ian Stannard, FX at Morgan Stanley, earlier on. This is what he had to say about the rand.
I think the South African rand is likely to come under some further pressure, given the problems we're seeing domestically with regards to the labour market, to strike action and so on. But longer term, I think it will start to receive some support once again. South African rand does still remain very well linked to the global cycle with regards particularly the asset market cycle. So a continued positive response to the global policy reaction to the slowdown could well provide the South African rand with some support.
All right, Eugen, just very quickly before we finish, I don't know if you heard that, but despite the weakness now, the fundamentals look pretty good and support continues for the rand. Would you agree with that?
I would agree to this, because I think that the global cycle, as mentioned by the comment, is likely to go on also next year. The China is likely to accelerate. So we'll see the support for the commodity prices and we'll see the support for South Africa. But right now it's actually a mess there, and will support further the prices of platinum, palladium and rhodium mostly.
Eugen, thanks a lot. Eugen Weinberg from Commerzbank. That is all from us for now, but join us every day at this time to take the pulse of the market. I'm Axel Threlfall. This is Reuters.